Hey everyone. As I consider the tragic 1-2 punch of Hurricanes Helene and Milton that struck Florida and the Southeast, it brings to mind a bigger picture issue: the rising frequency of natural disasters and the costs associated with them. If you look back over the last 40 plus years, the number of natural disasters with an inflation-adjusted cost of $1 billion or greater has been on the rise. The U.S. had an average of 3.1 natural disasters of this magnitude per year in the 1980s. In the 1990s, the average for the decade crept up to 5.5 per year. The average number per year in the 2000s was 6.7, and that figure nearly doubled in the 2010s to 12.8 disasters per year that cost more than $1 billion. And over the last 5 years, the average count per year has almost doubled again. From 2020 through 2024, the average has climbed to 21.8 large magnitude natural disasters per year. We still have 2.5 months left in 2024, and we've already had 21 of these large disasters so far this year. So my fingers are crossed that we have smooth sailing for a while. But as the costs of the two most recent natural disasters are added up, and as insurance companies are called upon to make their insured clients whole again, I suspect another trend investors will have to contend with will be the reignition of insurance costs. Since the beginning of 2019, insurance costs have been on a fairly steady rise. In 2020, when 22 natural disasters struck, rates surged by about 30% compared to 2019. Then the trend flattened out in 2021 to a still high 9% growth rate, and in 2022 the pace shifted again, rising to about 18%. Then through 23 and into 2024, insurance rates surged at a 35% pace. It looks like the trend stabilized in the last couple quarters, but I suspect the 1-2 hurricane punch in the Southeast could reignite insurance rate increases again. Now, I should mention that the rates I'm using are based on RealPage data for apartments, but I suspect the trend holds true for all types of commercial real estate. So, if you look at the 5-year span from the third quarter of 2019 to the third quarter of 2024, insurance rates have doubled. But the rate increases haven't been evenly distributed. Some metros have gone up more than others. Metros experiencing outsized insurance rate increases on a percentage basis include places with higher natural disaster risk like Jacksonville, Orlando, and Miami. But there are some other metros like Denver and Cleveland that also had big insurance increases on a percentage basis, but this is more of a denominator effect. Their rates were substantially lower than many other areas, and their absolute change was not as significant. Areas with outsized dollar rate increases include the San Francisco Bay Area and Florida. So California, where the risk of earthquakes and wildfires are higher, and Florida, where hurricanes are the prevalent risk. Meanwhile, metros like Portland, Oregon, Columbus, Ohio, Phoenix, and Milwaukee have had less insurance rate pressure. Nonetheless, the insurance model is built on spreading and diversifying risk. So even though Florida and California have outsized risk from natural disasters and their insurance rates have gone up considerably, the cost of those natural disasters will likely be spread across the entire portfolio of insured. In other words, pretty much everyone's rates will go up. So for commercial real estate investors, the insurance challenges are substantial. It makes underwriting deals more difficult, and rising insurance costs do have an impact. But the actual dollar figure really isn't that huge in the big picture. Insurance costs are generally about 8 to 10% of total expenses. Now, by focusing on the financial and economic impacts of natural disasters, I don't mean to diminish the human tragedy that these events unleashed. But for investors, these trends could materially impact decisions and underwriting and investment strategies. The trends are quite clear. We're facing more and more natural disasters, and both the magnitude and the cost of these events continue to rise. And those are things that investors will need to consider as they keep their eyes on the horizon.